Hello everyone. Thank you so much for joining us on today's webinar on the profit and loss statement. My name is Mallory Krieger and I am the Farmer Training Program Manager with the Land Connection. The Land Connection is a 501c3 nonprofit based here in Champaign, Illinois, and our mission is to grow the local food economy both on and off the farm for a healthy and resilient future. And part of that is providing education opportunities for beginning and experienced farmers. So thank you so much for joining us for the second installment in our Farm Finances webinar series. The first installment took place last summer where we covered the balance sheet, and today we are covering the profit and loss statement. This webinar is being recorded and will be posted to the Land Connections YouTube channel and on our website, and it will also be shared with you as a registered participant in an email later today. Please make sure that your microphone is muted during the webinar. This is to help minimize any background noise that others might experience due to microphones. And questions are encouraged, so please use the chat feature to ask any questions and make sure that you're asking them to the organizer or Irene. My colleague Irene will be moderating the questions, and we will stop periodically during the webinar to answer the questions that you have asked. All right. So today we will be covering the profit and loss statement. We will go over the background on what the profit and loss statement is, explore its components and terms, and then go through a step-by-step example of how to craft the profit and loss statement. Then we will analyze it, and then I'll point you to some other resources. So again, if you have questions, please type them into the chat feature, and we will answer them periodically throughout the webinar. So what is a profit and loss statement? It is one of the big three financial statements, those being the balance sheet, the cash flow statement, and the profit and loss. The balance sheet is a list of all of the assets and liabilities that a company or a person has. The cash flow statement is a projection or a record of when cash is coming in and out of a business. And then the profit and loss statement is a financial record that summarizes the income, expenses, and other costs such as depreciation that the business incurs during a specific period of time, usually the fiscal year. Essentially, it is a snapshot of farm profitability. So it is the money that you took in, revenue or income, the money that you spent, expenses, and what is left, your net income or loss. So this is an example of a profit and loss statement. Another name for a profit and loss statement is an income statement. So I may use those interchangeably, and you will see them used interchangeably on literature, in literature and on the internet. So this profit and loss statement is an actual one from my personal farm. I farmed vegetables for 5 years in Western Illinois before taking my position here at the Land Connection. And this profit and loss statement shows the record for my first year of vegetable farming. And let's go through some of the elements. On the left, there's a column for income. This is all of the money that I took in from the sale of CSA shares and at the farmer's market that year. I chose to break up my income into CSA and then 3 product categories for what I was selling at the farmer's market. On the left, the income is totaled into the gross profit. On the right, we have the expenses column, and here we have various categories for the different types of expenses that I incurred while farming that year. I tried to create categories that were meaningful for myself so that every year I did my profit and loss statement, I could compare meaningful categories. At the bottom, the expenses are totaled, and then set against the gross profit, the net income is calculated. So why should you complete a profit and loss statement? Well, firstly, it helps determine if the farm made a profit, which ultimately is the goal. We have many secondary goals and tertiary goals with farming, but the main one, if it is for a business, is to make a profit so that we can stay in business. It also helps compare farm performance from year to year. It's a wonderful tool for seeing how income has changed across categories and how expenses change across categories. It also provides a trust factor with a lender. So if you're seeking an operating loan or a capital loan, if you're able to walk into your banker's office with an already crafted profit and loss statement, along with your other big three statements, the lender will see you in a very positive light. They will see that you're a serious business person who is seeking to provide them with all of the information that they need. And lastly, it's a communication tool between partners, which can help reduce stress. So if you have a business partner or if you farm with your life partner or spouse, the profit and loss statement is an excellent tool that you can use to sit down at the end of the year and reflect on the decisions that you had made and to help plan for decisions in the future. And because you have your numbers on paper right in front of you, it can help reduce stress in those conversations because you can point to exactly what you're talking about. There's no worry about memory. It is all right there in front of you. So some tools that you can use to craft your balance sheet, your profit and loss statement are various spreadsheet softwares, Microsoft Excel, Numbers, Google Sheets. All of those can have templates loaded into them, or you can craft your own profit and loss template in those softwares. Free templates are available from SCORE, which is a nonprofit website that is dedicated to helping small businesses. They have fantastic templates for a whole host of different financial spreadsheets or documents that you may want to use for your business. And I've included a link here to the profit and loss projection template available from SCORE. And lastly, financial accounting software like QuickBooks will automatically run a profit and loss statement report for you based on the financial information that you put in. This is what I recommend that all farmers start to move toward, is using an accounting software like QuickBooks. It's very powerful and helps speed up the accounting and tax process at the end of the year. Additionally, the next installment in our Farm Finances webinar series will be about QuickBooks Basics for farmers. So if you're interested in that, I'll have more information at the end of this webinar, and you can also find that on our website, but it will be on May 16th. So the profit and loss statement, as I said before, is a snapshot of farm profitability. Did you make money is the question. If you made money, you made what is called a profit. That means your net income is positive. But you may have lost money, which means you have a negative net income. That is calculated by taking the gross income, subtracting the expenses, and that equals your net profit. Now, there are two different accounting methods that you will come across if you are doing your farm taxes or if you are doing any reading or using software like QuickBooks. It's the cash and accrual methods. And the cash and accrual methods differ in one very specific way. The cash method is based on recording income and expenses when they are received or made. So when you pay a bill or when somebody pays the invoice that they owe you. So when you actually have the cash leave your account or come into your account, that is the cash method. Conversely, the accrual method is when it records the transactions when delivery occurs or the invoices and bills are sent. So for example, if you are selling vegetables to a wholesale account, you may drop off a delivery on December 1st and hand them an invoice. If you are using the accrual method, you would record that transaction on December 1st. But if you are using the cash method, you will record that transaction when you actually receive the payment from them for that delivery. So if they pay you 3 weeks later, then you record that date 3 weeks later. This becomes important when you reach the end of the year, the end of either the calendar year or the fiscal year, depending on which you are using. So if you're using a fiscal year, that would end on calendar year, that would end on December 31st. So if that restaurant that you dropped off your produce to on December 1st paid you on January 15th, that transaction would be recorded in the next tax year. So that is the fundamental difference and importance between cash and accrual. Now, in farming, the cash method is more typical, and that is what most people use when they're filing their taxes. And the reason for that is exactly what I just laid out. At the end of the year, you can either pay bills or wait to pay bills so that you can change what your taxable income is for that year. It gives you more flexibility with adjusting your tax liability. So because in farming the cash system is more common, we will be using the cash system as the example today. So before I move on, are there any questions? Be sure to use the chat feature to type your questions, and my colleague Irene will ask them during these periods where we stop. So Irene, do we have any questions?
We do not so far.
Okay, fantastic. We will continue. So diving in, crafting your profit and loss statement. The following are the steps that we will go through to craft the profit and loss statement. The first is creating a financial inventory. Gather up all of your receipts, all of your invoices, all of your paid bills. Sort them into two categories, assets and liabilities, and income and expenses. That pile for assets and liabilities, set to the side, that goes on your balance sheet. It does not go on your profit and loss statement. The pile for income and expenses, keep. That's what you're going to be using to craft your profit and loss statement. Then sort that into your farm and personal buckets. This is your profit and loss statement for your business. So you want to keep your business and your personal separate. It is good to do a profit and loss statement for your personal and consolidated for both. But today we're focusing on that business side. Step number 3 is to enter all of that information into a spreadsheet software or a financial accounting software. Then calculate the profit and loss statement and analyze it. So diving into step number 1, creating a financial inventory. Anything that has money attached to it, any bill that you paid, any invoice that is still outstanding or that has been received, anything that you purchased, anything that you sold, gather all of that up and put it into your software. So as I said, the example we're using today is Lower Meadow Farm, my business, from the first year that it ran. So when I was crafting my profit and loss statement, I had to consider costs from every stage of production. So all of my management costs, how much did I spend in office supplies, what insurances did I have, anything that had to do with production, so my seeds, my fertilizers, amendments, potting mix, anything that I needed to use in the greenhouse or out in the field. Anything that I needed for harvest, washing, and packing, the packaging, the sterilizing chemicals, the broom that I used to clean the harvest and pack area. And then also any costs that I had to deliver or market. So I sold at the farmer's market. So I had fuel expenses, I had insurance expenses for the vehicle that I used, I had supplies that I used for the farmer's market booth, I had my farmer's market vendor fees. So then sort all of those items that you collected in your inventory into your farm and personal buckets, and then split that even further into assets and liabilities and income and expenses. So cash farm income, some things to make sure that you include are sales of livestock products, any crops that you sold. It also includes government payments. So if you are enrolled in any program, those government payments count towards your income. Tax credits and refunds also need to be counted if they are applicable. And also crop insurance proceeds. So in the previous year, if you had received crop insurance payments, make sure to include that in your income column. Some items that you should not include in your cash farm income. Do not include income from sale of land, machinery, other depreciable assets, or loans, or any non-farm sources of income. The reason for everything except for the non-farm sources of income is because those items generally should be included on your balance sheet because they are assets in the sale of assets, or they are liabilities in the case of loans. So loan money is not income. Loan money must be paid back with future income. So it is not present on a profit and loss statement. The profit and loss statement and the balance sheet are essentially two parts of a whole. The balance sheet is taking care of those assets and liabilities, anything that you owe to other people or that you own that is durable. And then the profit and loss statement is kind of the more fluid side. It's your income that's coming in and the expenses that you're paying out for things that are not assets or liabilities. On the expenses side, some things to make sure that you include: feed for your livestock, seeds, fertilizer, real estate taxes, any insurance that you pay out, any rents or leases. Interest that you pay on any loans is an expense, so make sure that you count that. And then also depreciation on any of your assets also counts as an expense. Do not include loss of livestock by death. So if you have loss of your livestock due to predation or disease, that goes on the balance sheet. That is a reduction in the value of an asset, but not an actual expense for the purposes of your profit and loss statement. Also, do not include principal payments. When you're paying down your loan, the portion of your payment that goes toward paying down the principal or the amount that you originally borrowed, that is not an expense. That is recorded as a pay down of your liability on your balance sheet. Also, purchase of capital assets such as machinery, equipment, and land. Again, those are not expenses. Those go on the balance sheet rather than the profit and loss statement. Here is an example of how I collected the information during the year to put on my profit and loss statement. So what you see on your screen right now is my pick sheet. So it's a record of my daily sales. Then I also have receipts that I had collected for amendments that I needed to use in the field as well as in my potting mix. And then also receipts for more supplies. So gather up your receipts, all of your sales records, all of your production records, so that you can input all that information into your spreadsheets. And using those receipts and the different types of expenses and income that you have, you want to create a chart of accounts. The chart of accounts is the list of categories that will be present on your profit and loss statement. So the only two required categories are income and expenses. But within income and expenses, it's useful for your analysis to have subcategories. And as I said before, on my profit and loss statement for income, I decided that I would have 4 categories. I had my CSA earnings, and then I had 3 product types that I sold only at the farmer's market. And I did that because that was useful for me to compare year to year how I was doing in different segments of my business. Some other ways that you could segment your income is using wholesale accounts or completely by product type. So say you're a livestock farmer and you sell chickens, cattle, and hogs, and you want to track it that way. That would work. If you're a grain farmer and you want to track it by the different crops in your rotation, that would work. If you're a more diversified farm or you have a lot of products, maybe tracking it by marketing channel like CSA, different farmers market, or different wholesale accounts is more useful for you. It is completely flexible what subcategories you use. But think ahead to what you might want to compare next year so that you set up this year's profit and loss statement as best that you can. The same thing is true on the expenses side. You want to gather up all of those receipts and see what major categories would be useful for you to lump them together in. Some common ones are advertising and marketing or custom hire, fertilizer and amendments, production supplies, packaging, etc. When you are making your categories for expenses and income, I highly recommend looking to your Schedule F. And if you have farmed in previous years, you are likely very familiar with the Schedule F. But if you're new to farming, the Schedule F is the form that you fill out as part of your personal taxes when you are filing your federal taxes at the end of the year. And it is the form that records your income and expenses for your farming enterprise. So let's take a look at the Schedule F. This is the top half of the Schedule F. You can see that you have the name of your business and some important information at the top regarding what type of crops you grow, what your employer identification number is, etc. On Part 1, we have farm income. And the front of the profit and loss statement, or Schedule F, for your taxes is for the cash method. If you use the accrual method, you will fill out the back of the form. But since we're focusing on the cash, we'll only look at the front. You can see that the IRS already has subcategories assigned for income categories. So this is a great place to look and as a starting place for how you might want to categorize your income lines. You do not have to use these exact categories, but what I recommend is that when you're setting up your chart of accounts, you look at these so that when you're setting yours up, they feed well into this and easily into this. So you might have more subcategories, but just make sure that you set them up in a way that you're capturing the information you need for your Schedule F. On the bottom half of the first page of the Schedule F, we have Part 2, Farm Expenses, using cash and accrual method. Again, just like with the income, take a look at what the IRS has as the categories, and then set up your categories in a way that they easily feed into it. So take a look at line number 28, supplies. There are a lot of expenses for farms that can fit in supplies. It's a big catch-all area. That's an area that for me, on my profit and loss statement, I decided I wanted to have more granularity. I wanted to be more specific. So I broke my supplies up into greenhouse supplies and field supplies. But it easily feeds into my Schedule F because I know that those two categories just go right into line 28. You may also notice as you're looking at this that there are some important categories that aren't actually on the default Schedule F, such as advertising and marketing expenses. You can easily add those in line 32, A through F. So that's where I put my advertising and marketing expenses is one of the other categories. So this is a perfect opportunity to pause for some questions. So Irene, do we have any questions?
Yeah, we've got one question. When you mentioned that you should include tax payments on your assets, does that include tax returns?
By tax returns, do you mean refunds? Yes.
I'm not sure. Holly, could you clarify that?
I saw it pop up. Yeah. So yes, and there are certain tax credits and refunds that so there are certain tax credits and refunds that are applicable and certain ones that are not. And I can't get into the specifics on those. That's where you would need to talk to a tax preparer who can help you categorize those. But for your own analysis purposes, I would go ahead and include them on your personal profit and loss statement. But once you get to tax time, I would talk to your tax preparer. Are there any other questions, Irene?
One asks if you will talk about deferral from page 1.
So the person who asked that question, could you clarify for me, what do you mean by page 1? Well, so I apologize, but I'm not sure how to answer the question because I don't know what you mean by deferral on page 1. So on the Schedule F, thank you. All right. So looking on here, looking for deferral. Could you give me a line that you're looking for? Line 6C. If electing to defer for crop insurance proceeds, I am not an expert on deferral for crop insurance purposes, so I would recommend talking to your crop insurance agent who could answer that question for you. But thank you so much for asking. Okay, so we will go ahead and move on to the next section, and we'll break for questions again in just a few minutes. So step 3 is entering all of that information into your spreadsheet or financial software. So you've decided on your chart of accounts, you've decided what you want your profit and loss subcategories to look like, you've gathered up all of your receipts and your bills and your invoices. Now you want to organize them into your spreadsheet. So if you're using spreadsheet software, I recommend downloading a template to help guide you. If you are using financial software like QuickBooks, the chart of accounts will be set up and you'll enter each of your transactions in individually. So here's an example of a very basic spreadsheet for use in crafting the profit and loss. And this was the one that I used for my first year of farming. So on the left, you can see I had my expenses, and I just went through, and every single receipt I had, I entered the date, the description, and the amount. And then I did the same thing for the revenues. So you can see I had my my CSA customers at the top, and then each of my markets at the bottom. Then I used this to reconfigure the spreadsheet into the profit and loss statement. This is an example of what that spreadsheet equivalent looks like if it's coming out of a financial accounting software program like QuickBooks. So I took all of that information and I put it directly into QuickBooks. And because I had set up my chart of accounts in there, you can see that it already is starting to do some totaling for me. So my greenhouse supplies were tagged as greenhouse supplies, and I get a subtotal for that. Same thing for total for repair and maintenance and for seeds and plants. This is making it very easy to aggregate the numbers and put it directly into my profit and loss statement. So then we get to the point where we calculate. So this is the same profit and loss statement, but now we've gone through the whole process of collecting the receipts, organizing them, putting them into the categories, and adding it up. So step 5 is analyze. So looking at my income, we see here that I have income in 4 different categories. So when I'm looking at this, I need to ask myself, where did my income come from mostly? What was my best performing category? Why might that be? Also ask myself, what marketing channels or products brought in the most money? And down at the bottom right, you can see gross profit. That is my total income without any expenses taken out for the year. On the expenses side, I want to ask myself the same questions. Where did I spend my money? What categories were costing me the most? Why is that? Does it make sense? How does it compare to last year? What would I like to change going forward based on what I see here in my expenses category? And at the bottom right, oh, I apologize, I thought there was going to be an error there. At the bottom right, you can see total expenses, and then below that is the net income. So the net income and profit is how much money is left over after you have paid all of your bills. It's the gross income from that income side minus the expenses, and that equals your net profit. So in this example, my gross income was $5,488, my expenses were $3,725, and my net profit was $1,762. So for my very first year of farming with no experience, I was able to turn a profit, which I was pretty proud of. But it is a very modest profit, so my goal after going through the profit and loss statement process is to grow my net profit the next year. So I would want to set a specific goal. So maybe I want to double it, or maybe I want to hit a specific number. But I wouldn't know at the end of my first year of farming truly whether I actually made a profit if I hadn't gone through and listed all of the expenses and all of my income and calculated my profit and loss statement. So are there any questions about the analysis of the profit and loss statement?
There is none yet.
Okay. Well, I will go ahead and move on, but if you have any questions, go ahead and type them in and we'll answer them at the next break. So, a wonderful utility of doing financial statements regularly is that you can compare performance over different periods of time. So we've been talking mostly about year-to-year comparison. So doing a profit and loss statement every year allows you to compare year to year. But you can also compare different periods. So you could calculate a profit and loss statement for a smaller period, like a month, and compare January 2017 with January 2016. Or you could compare adjacent months, January and February of the same year to each other, to see how your profit and loss is changing over time. You can also do it quarter to quarter or season to season. Whatever you feel is useful for you and the type of operation that you are running, comparing those different periods can show you trends in your own cash flow and expenses. And as we mentioned before, the profit and loss statement makes completing your Schedule F very attainable, very easy. And so I went ahead and I used the profit and loss statement that I created in my first year of farming and used as an example in this webinar, and filled out the Schedule F. So you can see that all of my income was from the sale of livestock, produce, grains, and other products that I raised. So that's line 2. So I placed all of my gross income there. And then in part 2, I put all of my expenses into their relevant categories. And because I had been mindful when I set up my profit and loss subcategories, it was very quick for me to plug those numbers into the Schedule F, making my end of year taxes nice and smooth, which is what we all want during, tax season, because it's a crazy time. All right, so this is our next question break. Did any questions come through in that time?
There are none right now.
Okay, great. So next steps. This link here will be sent to you in the chat feature by Irene. Please complete the evaluation before leaving your computer. Evaluations for the webinars help us shape future programming and continue to improve our offerings to you. Also, more information on profit and loss and balance sheets can be found at the link on the landconnection.org website. And our next webinar will be on May 16th. It's on QuickBooks Basics. So we will go through how to set up a QuickBooks account. How to craft your chart of accounts, how to input invoices and expenses, and run reports. So that webinar should be very informative, and it will all be geared toward farming. So it will be setting up a chart of accounts that's useful for farmers, and how you can use the various features of QuickBooks Online to track your sales and your inventory. Some other resources that I'd like to point out to you, Moses, the Midwest Organic Sustainable Education Service, has a wonderful book called Fearless Farm Finances, and it is available for purchase on their website or on Amazon. Another excellent resource is Building a Sustainable Business, and it is a book that was developed by SARE, the Sustainable Agriculture Research Education Service. It is available for free if you would like to download the PDF, or you can purchase the book directly from SARE. And thank you so much for being here. I think I saw a couple of questions come through, so I will take a quick look. So one question came through. I've got capital investments at the price point that I could either take them off all this year or I could depreciate them. Why would you choose one over the other? And that would be based on what the tax implications would be for you. So I would recommend looking at your income for this year and your projected income for next year. If you take all of the deduction this year, then it would all be offset on this year's income. So if it's an unusually high income year, this is the perfect time to take it. But if you're looking at having income growth or steady income over time, taking that as a depreciation over time helps in the long run reduce your taxable income. Again, this is a question for your personal tax preparer, so I would talk to your personal accountant to get tax advice on that, but that's kind of the strategy behind it. And the next question is, would death, loss of animals, with death, loss of animals, you would still be an expense. I can see that death, loss of breeding stock would be loss of an asset. That is a good question, and I don't know the exact answer to that. Because I think it would really depend on how long you planned on feeding the animals out. So if it was a short turnaround like poultry or less than 1 year, I would say if you were going to be raising that animal for less than 1 year, I think you could log it as an expense. But if it's greater than 1 year, then I think that's where it's a little bit more gray, and I would talk to your accountant or your tax preparer on that. Are there any other questions? Okay, well, thank you all so much for being here with us today. It was my pleasure to be able to provide this information for you. I hope that you found it useful. Please take a moment before you leave your computer to fill out the evaluation online. Irene has just resent the link so that you can easily find it. And I hope to see you all at our May 16th, I think it's the 16th, webinar on using QuickBooks, and then check back later. In the summer, we will be having a webinar on the final of the big three financial statements, the cash flow statement. So we'll be talking about how to set that up and leverage that for your use on your farm. We also will be having some webinars on marketing for farmers market vendors coming up later in the spring, getting ready for farmers market season to start. So check back on our website and our newsletter for more information about that. Well, thank you all so much and have a wonderful afternoon.